Hello, good afternoon. So, today we are about to talk about life and health insurance and annuity. Most important topics will actually be stock companies, mutual companies, definitely Lloyd's or of London reinsures, 1945 McCarran Ferguson Act, the 1970 Fair Credit Reporting Act. The NIC, which is the National Associate of Insurance Commissioner, the State General Association, the definitely Ambest, Standard and Poor's, Moody's, and Fitch. We'll also be talking about the natures of insurance risks and perils, as well as the hazards, the laws of large numbers, the speculative risk versus the pure risk, treatment of risk through avoidance, reduction, retention, and transference, physical hazards, moral hazards, elements of insurance risk, human life value. I want to prepare you guys in regards to this. This is in regards to basic principles of insurance. I'm going to go ahead and get you guys familiar to certain things. I'm going to speak to you guys in regards of life, health, and annuity. Give me 1 second. Let me just make sure that my camera is set. Never done this before. This is my very first videos, at least on YouTube. So hey, let's make it great. Hopefully this is good. Okay. Okay, as you guys watch on my video, you actually get to understand the important, pretty much the important key factors that plays on the basic principles of life insurance. Sorry, it's my very first freezing as well in here. Okay. First of all, what is a reserve? A reserve is a fund. These are funds that are held by the company to help fulfill future claims. Minimum reserves are usually set by the State Department of Insurance. A multi-line insurer is an insurance company or independent agent that provides a one-stop shop for businesses or individuals seeking coverage for all their insurance needs. For example, many large insurers offer individual policies for automobiles, homeowner, long-term care, life and health insurance needs. Okay, so sorry. For the purpose of insurance, stock companies are insurance companies owned and controlled by a group of stockholders whose investment in the company provides the safety margin necessary in insurance of guaranteed fixed premium non-participating policies. A non-participating plan is insurance under which the insured is not entitled to share in the indivisible surplus of the company. For the purpose of insurance, mutual companies are insurance companies characterized by having no capital stock. It is owned by its policy owners and usually issues participating insurance. A participating I'm so sorry. A participating insurance. That is so funny. I'm sorry. This is my very first video. Please, forgive me. A participating plan of insurance is a plan under which the policy owner receives shares, commonly called dividends, of the divisible surplus of the company. A reinsurer is a company that provides financial protection to insurance company. Reinsurers handle risks that are too large for insurance companies to handle on their own and make it possible for insurers to obtain more businesses than they would otherwise be able to. Fraternal benefits of societies or non-profit benevolent organization that provide insurance to its members. Producers are agents who only sell within their society, do not receive commission, and stay under a specific premium threshold, often have less stringent licensing requirements. The Fair Credit Reporting Act is a federal law requiring an individual to be informed if she is being investigated by the inspection company. The law also outlines the sharing and impact of such information and requires individuals to be notified prior to being investigated. A buyer's guide is an informational consumer guidebook books that explain insurance policies and insurance concept. In many states, they are required to be given to applicants when certain types of coverage are being considered. Buyer's guides are often used with life insurance, long-term care insurance, and annuities. A policy summary is a summary of the terms of an insurance policy, including the conditions, coverage, limitations, and premiums. Policy summaries are often used with life insurance, long-term care insurance, and annuities. The National Association of Insurance Commissioners, NAIC, is an association of all the states' insurance commissioners active in insurance regulatory problems and in forming and recommending model legislation and requirements. The NAIC does not directly makes the laws. Like as laws are made at the state level. They do work on suggesting like standards for states to adopt with the goal of standardizing like the insurance industry throughout the United States of America. The State Guarantee Association is established by each state to support insurers and protect consumers in the case of insolvency. Insolvency. It's a word like most of the word that you don't understand. I suggest you take a note and you take it down and you pretty much just like research it further on later on. Those are very common usable word, but not many people know exactly what insolvency means. For example. However, guarantee associations are funded by insurers through assessments. All authorized insurers are legally required to participate in the State Guarantee Association for any state they are authorized to do business in, regardless of where their corporate office is. Life insurance is insurance against loss due to the death of a particular person, the insured upon whose death the insurance company agrees to pay a state sum or income to the beneficiary. In its purest form, life insurance states, we will pay this amount when this person dies. Term life insurance is protection for a set numbers of years expiring without value if the insured survives the stated period, which may be one or more years. Terms life is designated to provide temporary protection in case a person dies during a set period of time. Whose life is permanent level, and who really life is really permanent when you think about it, like whose life is permanent level insurance protection for a person who pretty much whole of life from policy issues to the death of the insured, characterized by level premiums, level benefits, and cash values. A group life is a type of life insurance in which a single contract covers an entire group of people. Most often, the group is an employer and employee group. Those covered under a group life policy may or may not pay a portion of the premium and can usually choose their beneficiary. However, the insurer typically does not own the policy. The group employer owns and controls the policy. Consideration is the part of the insurance contract setting for the amount of the initial and renewal premium and frequency of future payments. Consideration is often said to include the initial premium and completed application for insurance. In other words, the applicant is saying, please consider me for insurance. Here is my initial premium, my completed application, and how often I agree to pay in the future. Please consider me. And that's what consideration stands for. The insurance agreement insuring clauses, insurance provision is the portion of the insurance policy in which the insurer promises to make payment to or on behalf of the insured It states the scope and limits of coverage. The insuring agreement is usually contained in the coverage from which a policy is constructed. In which words is it is the insurance company saying we insure to insure you under these conditions for this amount. Health insurance is a general way of describing insurance against loss through sickness or accident, bodily injury. It is also called accident and health, accident and sickness, sickness and accident, or disability insurance. It is important to remember the general term health insurance applies to many different types of insurance, not just the medical insurance that pays for doctors and hospital visits. Disability income insurance is a form of insurance that ensures the beneficiaries are earned income against the risk that's like a disability creates such as a barrier for a worker to complete the core functions of their work. Although disability insurance is designated to protect one's income, there are typical rules and regulations in place limiting the benefits of the disability policy to one's income level and typically only allowing protection for a portion of their income. Medical expenses insurance pays benefits for non-surgical doctors' fees commonly rendered in a hospital, sometimes pay for home or office calls. An entire contract is an insurance policy provision stating that the application and policies contain all provisions and constitute the entire contract. Notice of claim is a policy provision that describes the policy owner's obligation to provide notification of loss to the insured within a reasonable period of time. Notice of claim only requires the insurance company to notify of a loss. It does not require that proof or the loss is, proved it. Like pretty much, it doesn't need any proof to pretty much for your claim to be approved. Like you don't need to actually prove it. Reinstatement is the act of putting a lapsed policy back in force for producing satisfactory evidence of insurability and paying any past due premiums required. Most states have reinstatement laws requiring an insurer to allow for a policy to be reinstated upon request of the policy owner within a specific period of time. Property insurance is an insurance policy that provides a financial reimbursement to the owner or renter of a structure and its consent. And in the event of a damage or thievery, simply put, property insurance protects the things you own and rent. Casualty liability insurance. What it is it's an insurance which broadly encompasses insurance not directly concerned with life insurance, health insurance, or property insurance. Casualty insurance includes vehicle insurance, liability insurance, theft insurance, workers' compensation insurance, and elevator insurance. Casualty insurance protects you financially in the event of like someone sues you. Property and casualty insurance are often referred to collectively like as property and casualty insurance because the things you own have the potential to harm you and on people in ways that could cause them to sue you. The main kinds of property and casualty insurance includes auto insurance, homeowners insurance, renters insurance, and umbrella insurance. Proof of a loss is a mandatory health insurance provision stating that the insured must provide a completed claim to the insurer within days of the date of the loss. If the insured was once paid, they must prove the loss occurred. If they want payment, they will actually have to prove it. So this is a proof of loss. You have to actually show proof of your loss. I'm probably going way too fast for you guys, but eventually you guys will catch up. When I actually speak in regards to health insurance, life insurance, basic principle of insurance, I want you guys to grasp the basic, and this is what I'm actually giving you guys. So the basics, the pointers, like the most important things, like the things that the basics principles of insurance. I'm sharing this with you guys because I'm just new to this. As much as you're learning, I'm learning. I'd like for us both to be able to learn and make an income out of this. So yes, most definitely, why not? There's enough money out there for all of us to make. Are you with me? Let's continue. A deductible is the amount of expense or loss to be paid by the insured before an insurance policy starts paying benefits. Deductibles typically apply to property, casualty, and health insurance. As an insurance declaration page is a piece of paper which provides basic information about an insurance policy. Typically, the first face of an insurance policy is the declaration page. The declarations page normally specifies the name of the insured, address, policy period, location of a property, policy limits, and other key information. Just to go ahead and recap with you guys, as we actually spoke in regards to like the basic principles of insurance. Remember, reserves, stock companies, multi-line insurers, mutual companies, reinsurers, buyer's guide, fraternal benefits societies, Fair Credit Reporting Act, the NAIC, policy summaries, industrial insurers, state guarantee association, risk, perils, pure risk, speculative risk, numbers, risk pooling, risk transfer, risk retention, risk reduction, risk avoidance, hazards, reinsurance, moral hazard, morality hazard, adverse selection. The role of insurance. Throughout the centuries, people have pursued financial security for themselves and those who depend on them. We all have a compelling need for security and peace of mind. Most economy actions we take are to satisfy some need and thus attain some degree of security. Unfortunately, complete financial security is elusive, in part because of a certain universal problems such as death, sickness, accidents, and disability. Their problems can strike at any time and without any warning. The emotional stress these problems bring is increased by the financial hardship that are almost certain to follow. Sure. Death may strike anyone permanently. And should I say really prematurely. Honestly speaking, per se, I personally lost my father, and yeah, I can definitely relate to these. And one mistake that I made, that none of us actually have life insurance or any of that. I've heard of it so many times, but I made the same mistake of like plenty of other people of not having any life insurance. So yes, death may strike anyone, and a very, very devastative, prematurely, and permanently. But yet again, this is why I do this class, and this is why I'm doing these videos, is to be able to share my knowledge and be able to be that person to show you the reason why it's necessary and the needs of actually having health coverage. I'll go ahead and continue. My apologies. When death takes the life of a family provider, surviving family members we often suffer, and it's one of those times like where they are where we're pretty much left without anything. And I could be one of those people that actually can vouch and say that this is actually real, this is actually true. I went through it. My dad is a breadwinner, and when he passed away, like all of our lives changed, and that's why it's very much so very necessary. This is why I feel like this is important, and this is something that I had to do. However, they are left without any adequate income or the means to provide even basic necessities. Life insurance occurs an instant estate, regardless of when death occurs. However, some people faces the unpleasant prospect or outliving their income. Retirement may be forced upon them before they have adequately prepared for a non-income earning as existence of a sickness or a disability can also leave economic scars and often more intense than death. An accident or illness can easily result in catastrophic medical bills or in the inability to work for months or years or forever. Insurance evolved to produce a partial solution to such economic uncertainty and losses. Life insurance, which is based on actual mathematical principles, guarantees a specific sum of money upon the death of the person who is insured. Health insurance also evolved from scientific principles to provide funds for medical expenses due to sickness or injury, and to cover losses of an income during like a disability, or even the annuities like provide income by making a series of payment to an annuity for a specific period of time of life. I do apologize. So an annuity again provide income by making a series of payments to the annuitant for a specific period of time for life. Really, it could be either or, but regardless, if you think about it, annuity provides you with an income by making just as your payment. You will be guaranteed a payment to you as the annuitant. To apologize.